One time for the underdog. One time for the underdog. You got the world on your...
Hey guys, welcome to the FX220 YouTube channel. This is Oussama, expert trader, mentor, and in this video I'm gonna take you through my top-down analysis process and how I analyze my currency pairs on the weekends. This is basically the analysis that's gonna be the foundation of the trading week. All right, we will try to analyze Euro USD and apply all our technical skills to kind of know what is the trend direction, what is the bias for the next week, what are the levels that we are looking for, what are the trend lines that we have, and everything. This should be done on the weekends, and you can update your levels, trend lines during the week. Obviously, when market moves to new highs, let's say market moved, let's say, all the way down here, and you don't have like levels and everything around here, so you can update your levels, your new levels on the hard time frames and check if they're valid. I hope you understand what I'm saying. So what I try to do, I go to the highest time frame possible, which is the monthly, and I see what price is doing, like what recent price action is looking like. Ignore all these levels over here. I know it looks messy. You have to know, guys, that I've been trading for many years now, and I have some key levels all the way from, you know, 2000, early 2015 and 16 and everything. So this is analysis. This is really old analysis mixed up with the new analysis. So it doesn't make a lot of sense here. Your charts can look way better if you focus on where the price is trending right now. Let's say you only take this zone right here and analyze it and draw all the key levels that are related to this zone. You don't have to do like I'm doing, because I drew all these levels from previous years. So let's get back on the charts and focus on what the price is doing on the monthly time frame. So as we can look here, price been in a recent downtrend. As you can see right here, we've been in an uptrend. If you take this uptrend right here, price bounced off a major descending trend line. If you can go back, euro is trapped in a channel, in a descending channel. As you can see right here, you can only see this on the monthly time frame, and it's respected. Price bounced here once, twice, three times, and the fourth time, and it did fall down quite massively. So I had this trend line, and I was expecting a reversal at this time, and this is what exactly happened. This happens to also be a fib level. This is the 61.8 fib level. So this is a retracement to one of our fib levels, a major descending trend line, and a bunch of key levels here, weekly levels, daily and monthly. So if you look here, the very long-term trend line, euro is bearish. Looking at the monthly time frame, as you can see right here, notice the red candles, compare them to the green candles. They're much more stronger, they're faster. If you analyze the time that it took price to pull back from here, it took like a lot of months. Let's count it from here. It took 22 bars, which is basically 22 months to pull back this much, which is really not a lot, but it took the price like only 8 months to fall this big, 10 months. You know what I'm saying? This is called the time factor. If you compare this area right here, which is the pullback, which basically took 2 years only to pull back, but it took around a year for this big fall. So that's how you know it's the trend direction is a downtrend, and you can see it across all the time frames. When you apply the time factor, notice here the same thing. Price been going up for very long, but in 3 months, boom, it fell down massively. That's how you know that there is a strong shift in the market direction. And looking at the monthly time frame, the euro has been trending down since the early 2008, and the same momentum is still around our time here. As you can see it, price did come low, created lower lows, This is another lower low, which indicates that the trend is still going, and we created a lower high around this, and the price is falling quite massively, not as strong as the previous falls, but this fall seems to be also sharp. Looking from these candles, analyzing this monthly candle, this is a Mariposa candle, which is basically a candle that have no wicks and only closed, straight closed. Like, it's a very strong candle, which indicates continuation. So basically that's what we are expecting. So besides analyzing the trend direction from the lower lows, lower highs, looking at the momentum on the higher time frames, we're actually trending in the direction of the big long-term trend, which is great for us. If you go short on the lower time frames, like us, we trade on the 15-minute time frame. When we go short, we are trending in line with the major trend, in line with the long-term trend, which is great for us. This is how you can know that market is gonna go for a lot more pips, because you are in line with the major trend. So this would be the long-term trend, and this would be the intermediate trend right here. We're also in a downtrend. So if all the trends line up from the monthly and the weekly, the daily and the 15 minutes, and the trend direction is the same across all these time frames, you've got a big payday, man, because the trend is gonna be strong. So what I try to focus on every time frame I go through is many things. I look for the key levels, the trend lines, the fibs, the channels, the candlestick patterns, and the EMAs. So these are 6 things that I focus on. So if we check our key levels, I mean that we should draw the key levels that market is trending around. So if we are trending around here, I make sure that I have all my key levels set to the upper side and to the downside also. All right, so if market trends up, we have our key levels, they're ready. We have our trend lines, they're ready. If market trends down, and we have everything. This is what I mean. We look at the fibs. If we can plot any fibs, if you can like try different things, you should try new ideas. Let's take this from low to high, and let's see what price is sitting right now. We change the color to black, and we can see that price is sitting between the 50 and the 68% fib retracement. So we may see a bounce around this area. I don't expect that price is going to go all the way up. We don't try to predict these very long-term moves, but I've only shared an idea with you guys to try to use your imagination, try to use your fibs to predict different scenarios that may happen. So we use our fibs. We look at our EMAs. So we have the 50 is below the 200, which indicates a downtrend also. And we try to look at the candlestick patterns. As I say, this was a Mariposa candle off of a weekly level. And this monthly candle right now is looking like a shooting star. It went all the way up, couldn't close above this trend line, couldn't close above this monthly level at 1.14600, couldn't close above it, and it's currently pulling back down. So it could be just a retracement before price breaks this level. If we break this level, next level would be 1.12220. Oh, what a coincidence, FX 220, the same as this price. And if we break this level, we retest it, we know where we're going. So market moves in steps. You see all these steps, if you count them, they're basically have the same ratio. So if market breaks this step, it's going to go to the next step. If it breaks this step, next step, and so on. Looking at this, we have everything is fine. Let's jump on a weekly time frame. This is a top-down analysis, so we start from the bigger time frame and we get to the lowest time frame. On the weekly time frame, we try to focus on the same process, on the same 6 things that we have. So let's see if we have any trend lines here. We actually have a trend line right here, so we should draw it and extend it to the future in case price trends back up here. We have a trend line. This is what I mean by top-down analysis, and being aware of all the possible levels that price may respect. Because if you're trading on the 50-minute chart and you see price reversing suddenly, you don't know what happens. But if you have a trend line here, oh, you say, why did price reverse? It reversed because it hit a major trend line, and this is why it reversed. or it hit a weekly key level right here. As you can see, a perfect example. Price hit a key level and a trend line at the same time, and it bounced back up strongly. If you don't have this level and this trend line, you don't know why market did this. And this is why our key levels are very important. They are the foundation of our trading, and you should learn these technicals. They're definitely going to help you in your trading journey. Even if you're trading on lower time frames, we do trade on lower time frames, but our technicals are on point even on the higher time frames. So we could be better than any price action trader who basically trades solely based on price action, but we actually have an approach that covers everything. We know how price action traders and swing traders trade, breakout traders, reversal traders. We just have a better approach, and it's more proven to work consistently, and an approach that have solid confirmations behind the market, not just price action confluences or indicators. So weekly, the same thing. We check the key levels, we check the trend on the weekly time frame. We currently did not create a lower low here. Notice here this low didn't break this low, so if we broke it, it confirms for us this is a downtrend. We may break it next week, we don't know, but we couldn't close below this level and this zone right here, and this candle closed as a doji, but we broke out of this trend line and we're retesting it. So let's jump on a daily time frame and see what we can find. The daily looks great and looks more accurate. This trend right here that we broke, we're currently retesting. We have another descending trend line right here. This daily candle closed as a shooting star. Basically, it didn't close all the way down here, but it looks like a shooting star. So we have a breakout, retest, and we may have a continuation pattern. Maybe this continuation pattern, if it breaks below this weekly level, we may create a new lower low, lower than this one, and the trend may continue. That's one of the possible scenarios that may happen. Or we may have price pull back all the way to the upside before falling down again. We don't know. We don't try to predict very long-term moves. We're only gonna trade in line with the immediate trend direction, the trend that you see on the 1 hour or the 15 minutes. And we try to be following and trending in line with the major trend direction. That would be awesome. So daily, we have everything. We have our trend lines, they're on point. We have our key levels, they're all set. If you don't have these levels, you try to draw them. Try to draw them on your own and don't copy this, so you can really practice. But if you want to copy, no problem. You can edit them to make them more accurate. You can play with them, make it your own, and learn from this process and apply it on many currency pairs. Let's drop down on the 4-hour chart. Notice how things started to become more and more clear. Price action is clean on the 4-hour chart. Notice how this trend line is respected like to the T. If we go back, look, that price could not close below it. And right here, price broke it, retested it, fell down, then it's retesting it again a second time. So we have many confluences on this zone right here. It was a support turned into resistance. We have a trend line here. We have another descending trend line right here, as you can see it. So we have many confluences why this drop happened, and we try to check everything. We have our key levels. Let's try to plot on some fibs. Let's take this high from high to low. Price is sitting right now on the 61.8. Very accurate fib application, as you can see it. This is the 61.8. Let's make it with another color. Look at this. We may have an ABCD pattern. Our followers know what this ABCD patterns is. So we take the high as the A, we take the low as the B, the C would be the retracement to our one of our key fib levels, and the D would be at the extension. So if we break this level, our next target would be point D, which is the extension, the minus 0.272. And again, if we reach D and try to break this level, we may have D2, which is going to be the second fib extension. This is how the trends work. So we have an impulsive wave, we have a pullback, then we have an extension. This is how most trends work. If you analyze it, let's try and analyze this, and you'll find exactly the same thing. This is the impulsive wave. The pullback was exactly at the 50% fib level, and this is the extension. So price hit our first extension, the D1 here. So trend, pullback, and trend again. And if you break this, as I said, this is another confluence. This is the second extension that may be hit. So this is one of the technical tools that you can use. We jump on the 15-minute time frame when the magic happens, and we now have done our top-down analysis, and basically we have all our key levels set, everything is set. We now have to wait for our criteria to be met, for our strategy to start to play out, so we can trade, so we can take all that information that we had accumulated from doing the analysis from the higher time frames, and we will start to apply our market cycle analysis, and we wait for our strategy to play out. These are the trades that we took last week, a couple of good trades. So notice how, as I said, the major trend direction was a downtrend, and we took trades to the downside on the 15-minute chart. That's where there were really good trades, because they were in line with the big direction. So that's it, guys. I hope you really liked this video and enjoyed it. Don't forget to leave a like and comment. Don't forget to share it with your friends if you find this helpful. And also, if you're looking for a complete program that's going to teach you all of this, that's going to take you from a beginner trader to an accomplished, complete trader that's ready to conquer the markets, contact me on the links below, and I'll provide you all the information regarding the one-on-one mentoring program. This is one of my new students that just joined today, and this is the message that he sent me. I'm very grateful that you're helping retail traders like me succeed in the Forex market. The videos are the best I have seen so far, and your approach to the market is very good. So we have like countless of great reviews and great experiences and results from our students. Check them out on our Facebook page. And until next time, good luck and good trading. This is FX220.